Hi, Irene Hammond with eXp Realty. Today I'm sitting down with Jacqui Hamilton of Concord Mortgage, and we are talking about home equity conversion mortgages. One of the questions that I have, and I know that you said you get a lot of times, is let's say I'm 62, so I qualify for buying my home.
Sure.
I've done my cash down payment. I don't have a mortgage payment. I've lived in my home now for 3 years.
3 years. Okay.
That's a good time frame, right?
Yeah.
I've lived in my home for 3 years and I want to move.
Sure.
My grandchildren are no longer living close to me and I want to get close to them. So I want to move.
Okay.
I know you just told me that I can sell my home and
Sure.
it's just like normal, but what kind of a financial bite is that going to cause because I haven't been making a mortgage payment?
Yeah.
What kind of what's happening with the equity of my home?
Mm-hmm.
How long does it take for that equity to that not paying a mortgage payment to absorb the equity?
Sure.
And tell me a little bit more about that.
Okay. Well, if it's 3 years, it's not going to be a huge difference. There is interest accruing on the loan. Okay. So let's say your home is $300,000.
Okay.
Easy numbers for me. So $300,000, and let's say you were required at the time, because you're only 62, to put, let's just say 50%. That wouldn't be an accurate number, but we're going to use 50%.
We're just going to use
numbers.
it. Just easy.
So you've put down $150,000, so you've got that in equity, but there's a loan on the $150,000 that's outstanding.
Yep.
Okay, and that loan is accruing interest.
Yes.
Okay. So what would happen after 3 years? You would have maybe, let's again round numbers. Let's say $10,000 in interest. Again, that is not a true number, but let's just say 10,000.
We're pulling numbers out of the sky. These don't hold us to it.
Right. So you would owe $160.
Okay.
Right.
Yep.
So when you sell your home for, let's say, $300,000, let's say it didn't appreciate, you're going to pay off that $160, and you would take your $140, and you would move to your grandchildren. Let's turn that around, though. Let's say that you've lived a good 25 years in the house.
Okay. That's a full life plan. Buy the home, stay put, stay in place.
And let's say that this is your final home.
Yep.
Okay. So, and you've left the home to your grandchildren. After living in the home for 25 years, not making a mortgage payment, that loan has accrued beyond probably what the appraised value is going to be. Okay.
So then I've really gotten the value out
of
this loan. Now, what happens then to my grandkids? Do they then take on that debt?
They don't. That's the great thing about this loan. It is the only non-recourse loan out there.
So when you say non-recourse, what does that word non-recourse mean in regards to this?
It means that your estate, neither you nor your estate, is responsible to pay back that deficit.
So if I've lived in my home for 25 years, I've used all of the equity in the interest, then and I pass on, then the house, I just hand the keys to the lender and say, FHA, have a nice day?
That's exactly what you say. That's
FHA,
what you say.
have a nice day. And what's really nice is then 25 years of not making a mortgage payment.
Yeah.
I know, talking to financial planners, that the biggest expense that someone has in their retirement is their home.
Yes.
And so if you can get that mortgage payment out of the financial equation, you're still paying your taxes, you're still paying your home insurance, you're still paying HOA fees, but the mortgage payment, getting that out of the equation, the amount that you need on a monthly basis to live is significantly less. And so that makes a huge difference for lifestyle for people.
It absolutely does. It absolutely does. I could tell you story after story how this loan has changed my buyers and my clients' lives.
For more information, make sure you check us out down below. All of our information and how to get in contact with myself and with Jacqui is available down there. Thank you.